Thought we'd kick off stock of the day, Ansell. Ansell plans announced today to acquire the personal protective equipment business of American-based Kimberly-Clark for $640 million US in cash. The company said the acquisition is expected to accelerate delivery of Ansell's growth strategy and enhance its global position. Of course, it was Ansell a darling during the pandemic. When the pandemic sort of finished and everything opened up, got caught with a lot of stock, has been wallowing a bit ever since. Gaurav, what do you think of the announcement and the stock?
When I saw the trading halt this morning, I was a little bit nervous, but I've only gone through the details quickly, so I'm not too familiar with it, but from an early glance, I'm actually in favour of this. This looks like a really sensible deal. I'm sorry to sound so surprised. But just so often we see big companies trading with other big companies, moving pieces of a chessboard around, and they do it for very little value. They rack up fees, and a lot of it I think is activity for the sake of activity. This seems to have genuine strategic rationale. I think the acquisition is a great fit for the existing portfolio. It's interesting the way it's funded. It's a big purchase. And they're paying in cash, which really surprised me. And I think I admire that discipline because the share price is low. They could have very easily gone out, raised equity. This trades at about 15 times earnings. They're buying at something at a lower multiple. They could have just said this is going to be earnings accretive and brought out the jargon. But they haven't done that. They've bought it in cash to save the dilution. They've taken on some debt. But this is a business that can handle a bit of debt. It's been pretty well managed historically. It's not a blockbuster business. It's not one that's ever going to knock your socks off. But we've owned this on and off over the years. It's not in the portfolios at the moment, but I think this is a really good step. I like the deal, like the structure. I think it's cheap enough to buy. I'm happy to buy it. I don't own it. The funds don't own it. But for conservative investors, this is a perfectly sensible idea to own.
Okay, great. Nathan?
Yeah, look, I agree with most things Gaurav said, which is kind of scary. But anyway, Ansell is, for me, I mean, it used to be the condom play and the health, but now it's a health and safety. It pretty much trades with manufacturing PMIs. So, surprise, surprise, you know, we actually were in it a while ago. We got out. We thought manufacturing will continue to struggle, which I still think. But, you know, the last update from US and China, both are back in expansion territory. Which was a surprise that it happened so quickly, but given the amount of debt that's playing out, that makes sense. But in a slowing global growth, it's still a question. But look, I think they're okay. I mean, I like the business. I think long-term manufacturing play, this thing should be higher. And I think the acquisition here is actually not bad. And the fact that, as you said, they went for the cash.
Yeah,
it's actually,
interesting.
I mean, I hate management, like the worst time of raising money.
Yes, that's right.
You know, you get killed at the bottom, dilute the crap out of it.
If you raise equity at a really low share price, that's permanent dilution.
Exactly.
And that kills your returns.
I'll give you an example. There's only one sector in our market that never went higher than the pre-GFC, property, because it raised at the bottom, diluted the crap out of you. Right? So I like management of Ansell, and this is a smart thing which backs my view. I'm not getting in Ansell right now because it's just a global growth worry. It's still going to take a bit of time, but geez, when thematics turn and growth improvements are sustainable, this is one you want to hold. It's a boring business, but
it's
it
not
can
a growth
run.
stock as...
Yeah, but it can run. See, the valuation can run quite a bit from here when the cycle turns, and that's what it's one of those classic.
Well, it was 42 during the pandemic.
Exactly. Well, that's a bit too high.
Which,
but, but I would see this as a $30 stock when the cycle is running. So you can make 25-30%. So it's a boring stock, but it's a good stock. So if you have it, you hold, right? I don't think there's anything negative on this, unless we find something. But so far, I think it's good. But fresh money, I'm not jumping into it right now. I'm still waiting to see how the growth plays out. But look, like management, I like the global model, and the branding is good. So I'm happy, and I think this one makes them even better play.
But Gaurav, you've got it for conservative investors, saying it's a buy, and they're investors that, you know, you might be retired or whatever, and you just want solid blue chips like, you know, Woolworths or Ansell and those sorts of stocks, isn't it? But you don't want to be scared, or if there's a sell-off in the market, they're not going to be sold off as badly.
You're probably not going to wake up one morning and find the business disrupted.
Yep.
You're not going to wake up and find they've done something really stupid. It's a business that doesn't need a genius to run. It has systems. It's been around for a long time. It's in number 1 or 2 in every category it's in, and it's adds a lot of value with its products. Has a small degree of pricing power. Like it's a very sensible business to own without being a wonderful business. The valuation, about 15 times earnings, pays a little yield, and that yield is growing. I think it's fine.
Okay.
Yeah.